If you've ever reviewed your trade and said to yourself, I entered too early, why did I put my stop there? Why did I move my stop? Then this video is for you. I used to think I was an impatient trader, but the truth is, I didn't know how I wanted to enter the market. I would review my trades and find myself saying, oh, I entered too early. I should have waited. Why did I place my stop here? But when I reviewed my trades, it wasn't impatience. It was lack of a defined entry system. In this video, I'm sharing 3 specific entry systems I tested and the one that changed everything for me.
Some of the challenges you might be facing are inconsistent loss amounts. You enter a trade because it looked good, thought it might run because you saw price pushing higher and lots of green candles. You might even blame impatience because if you review your trades, you see that you're entering too early, maybe you enter and then you got stopped out, things like that happen. So just for context, you have a trending stock and you see it making higher lows and higher highs, and eventually it breaks out of resistance and you chase the trade because you think that it's gonna go higher, only for it to reverse on you. Now you're red. Or you might even be one of those people that just try to enter because you see that buyers might be stepping up of this level, so you add more to your position only for it to just reverse lower. Now, the strategy that I trade and I believe in is simply, some people call it break and retest, but it's just waiting for a pullback to key levels and seeing that buyers may step in or sellers may continue to push the price lower, depending on the trend. So I've tested and I've tried 3 different entry models, and one of them is my favorite, and I'll be going over it today. So the 3 different type of entries I'm going to be talking about is the breakout entry, which is the most aggressive entry. It works for some people. And then the pullback plus strong price action, and the pullback and strong price action with confirmation. So the first one I'm going to be going over is the breakout entry. Most people are familiar with this, but I'm just going to go over it quickly. You have higher lows in the market, and then price breaks over this resistance level over here and you enter the trade. Sometimes it works because momentum will push the price higher, but I'm going to show you the pros and cons of this one, this breakout strategy. The pro is that other buyers are stepping in to push the price higher. When it works, it leads to a high reward trade, right? The con is that this strategy has 30 to 40% win rate. But here's the thing, 30-40% doesn't mean that you can't be profitable. Some traders trade this way. It depends on your personality. It's just that you need to allow your winners run. When you win, you need to let those winners run to at least 3R. By 3R, you risked $100 on the trade and you need to be looking to make at least $300 on those breakout trades. Because if you're not averaging at least 3R over like 100 trades, you'd end up being unprofitable and frustrated. And if you're trading options, it's even more difficult to kind of gauge risk and manage your positions. I made a video explaining how to manage risks with options. So if you're new to my channel, you can check it out. Another con is that you can take unnecessary losses with this one due to fake outs. Because when it doesn't work easily, what will happen is that it would just go up and then down and it would sell really quick. And then you lose a lot of money because the delta on those option contracts would flip on you. Momentum, if you don't call your losses, it could get ugly. So that's the pro and the con of the breakout entry. The next one I'm going to be talking about is the pullback plus strong price action. With this one, you wait for price to come back into the breakout level, and you're probably thought that, oh, because buyers are stepping in at this level, you can just enter the trade and then look for continuation. You're probably right. It works. You can enter on this candle and look for continuation. Some people might even just boom, enter. Once this candle closes, they enter right here. The thing with that is that your risk is reduced, right? The thing with that strategy is that your risk is reduced because you waited for this pullback to happen. Versus the breakout trader just took the trade. Option premiums, if you trade options, are skyrocketing here because the candles are green. If you're entering calls, right? It's pushing higher. And on this pullback, it's most likely reduced. The premium price has probably dropped. And you'll be surprised to know that the person that probably entered on this breakout, if they have to sit through a pullback, will be red if you're trading options and you know how options work. So the pro and the con of this entry model is that, again, you have reduced risk because your stop loss is literally the break below this level and you're entering the trade. So your risk is reduced. It's a 1. And on all trades, most like on this trade, you probably want to be targeting 2R, right? You want to risk $100 to make $200. Another pro is that you're waiting for buyers to truly step up to see if this move is happening. You're not buying, you're not FOMOing, you're not just going with the crowd. And you get good order fills and you rarely miss trade when you wait for the pullback. The con is that you still get to take unnecessary losses, because if you don't wait for that confirmation and you just buy because you saw that this wick was created and you just buy this red candle and boom, you're trying to get into the trade, what happens sometimes when you get faked out is that it will just reverse aggressively. So you're still prone to fake outs. An entry, most of the time with that entry model, is based on experience and candlestick interpretation. A lot of seasoned traders will trade this and they'll also probably be watching the level 2 and time and sales to be able to see that buyers are truly stepping in and they can just enter on the red candle, and option premiums are lower when you're entering on that red candle. So your risk is smaller, and then if it works, you have like higher reward. The win rate on this one is slightly higher than the breakout one. It was around 50 to 55% on this one. The next entry model, which is my favorite, I saved the third and best for the last. Pullback plus strong price action and confirmation. What this looks like is that you're seeing the trend is pretty clear. You wait for the pullback. Not only do you wait for the pullback, you wait for this red candle to form. It might not always look like this. You might not always have the pin bar, but when you have this wick, that's a sign. It's a sign that this is the most bullish one. That's why I'm using it in this example. But when you see this happen, maybe buyers step in, like you have a wick, or maybe it comes in and it rests on the level, it doesn't break through the level, you have that bar as a signal bar telling you that buyers might be holding this price at that price level. So watch. Then you have another bar that shows up, price still holds that level, and it closes above the open of the previous red candle. That's a sign saying, I'm going to buy, I'm going to enter this trade. So you enter the trade, and your stop loss would be the break of this signal bar, or the sign. I call it a sign. My sign bar telling me, yes, you can look for a trade. Your stop loss would be a break below this bar. Then you can get in the trade, and then you're targeting higher bid. Now, the pro and the con of this strategy, although it's my favorite, it has a high win rate of 60%, which is considered high in my opinion. If you're anywhere around 60%, that's good. Another pro is that you're prone to less fake outs, and your stop loss is just one candle away. Your stop loss is pretty clear. Your stop loss is defined. A lot of people enter trades without knowing their stop loss. I used to be guilty of it. It's pretty bad. If you don't know your stop before entering a trade, you need to refine your entry model. You can't just be entering just because maybe you see buyers pushing the price or you're seeing a lot of red candles. You could set yourself up for failure. Another pro is that the move happens very fast. Once you get that confirmation, it's a quick move. You're in and out of the trade if you're a scalper, like within even 5 minutes. But then with pros, you have cons. The con is that you could miss the trade. If you're not alert, you're not watching, you could miss an entry on it. Your risk to reward is much smaller on these trades because you are waiting for confirmation. So with confirmation, you're entering on a green candle, and probably sometimes it's closer to your high of day target, like I showed you here. And if you test this strategy, you see that probably around 1 to 1.5 hour with this strategy. But the good news is that because it has a 60% win rate over time, you can get away with having a 1 to 1.5 risk to reward ratio. The final con is that waiting for bullish price action causes the option premium to be a little bit more expensive versus the person that just did not wait for that bullish price action. They knew based on experience and context and maybe watching level 2 that buyers were stepping in and they saw that red wick, they bought the red candle and they entered the trade. That person probably paid slightly lesser premiums if you're trading options, or a slightly lesser price than someone that waited for that extra confirmation and conviction. So if you're someone that wants to have a high win rate, this entry model, pullback, strong price action plus confirmation would probably be best suited for you. I'm not gonna end this video without giving you a checklist. Before you trade, I want you to take notes of these 4 things. Ask yourself, are we trending either up or down? Works both ways. If we're in a ranging market or we're still in between previous days high and low, we're still in between pre-market high and low, or like we haven't broken out of the first 5-minute candle range, don't take a trade. What trigger confirms it? Do you have a signal? Do you have the confirmation that you can enter the trade? Where would you set your stop? I showed you where you can set your stop using my favorite entry model, which is the pullback, strong price action, and confirmation, because your stop loss is one candle away. And then when not to take a trade. Don't take a trade when we are choppy, because you could easily get faked out and just take unnecessary losses. So that's it for this video. Thank you so much for watching to the end. If you made it to this point, I really appreciate you. Leave me a comment, give me some feedback in the comment section. I read everything and I respond to everybody. I'll see you on the next video.